It's Glenn here from Precision Wealth Management. I just want to do a quick video today talking about the tax payable on a TPD claim or a TPD payout. Now firstly, there is actually no tax payable on a TPD claim, generally speaking. There is some in some cases where it's owned by a business and they've been claiming it as a tax deduction as part of a key person insurance policy, but for most people, personal individual TPD claims, there's actually no tax on the TPD claim. Where there is tax though is when you get a TPD claim paid into your superannuation fund, and this is what happens in a lot of instances. And so the tax you're actually paying is not the tax on the TPD claim, but it's about the tax on the superannuation withdrawal. And that's what we'll talk about today. So there's two different types of tax, I guess you could say, you could pay when taking money from superannuation after a TPD claim. And one of them is a lump sum, and there's a tax rate for that. And then you could start your disability pension, and then there's tax on the pension payments. So the first thing is your superannuation after receiving a TPD claim will be broken up into two segments, a taxable and a tax-free portion. The proportion in each taxable and tax-free is based on a formula to do with your age, and it's a bit too complicated to get into this video, but I'm going to work on an example saying if you had a total and permanent disablement policy for $1 million and it worked out that you had a 50% taxable component and a 50% tax-free component. Now tax-free is tax-free, so we're going to be working with, in this instance, $500,000 taxable component. So if you were to withdraw the full $1 million as a lump sum, that means you need to pay tax on $500,000, the taxable component, and the tax rate is 22%. So that means in this example, you would pay $110,000 of tax to withdraw the $1 million of TPD claim, because in this example we just said that 50% of it will be taxable and the other 50% is tax-free. Now, before you ask, no, you can't just withdraw the tax-free component. You can make any size withdrawal you want, but the proportions of taxable and tax-free have to come out in the same proportion. So in this example, if it's 50% taxable, 50% tax-free, that means if you were to say withdraw $100,000, well then $50,000 would be taxable, $50,000 would be tax-free. The other example, tax that you could pay is rather than withdrawing a lump sum, you could convert that $1 million over to a pension and start a disability pension. And then you draw pension payments. And the tax rate in which you pay on pension payments is not a flat rate of 22%, but it's at your marginal tax rate. So it depends on how much taxable income you've got as to how much tax you're going to pay on that. So for example, if you were to convert that $1 million to a pension, a disability pension, and then start drawing pension payments, well, the amount of tax you're going to pay is going to be based on the pension payments you're drawing and any other taxable income. So in this example, let's say you started a disability pension with $1 million and you drew pension income of $40,000 per annum. As we said before, 50% is taxable and 50% is tax-free. So the 50% that's taxable means $20,000 will be taxed at your marginal tax rate. Now in Australia, $20,000 of taxable income will mean you won't pay any tax at all, because we've got the $18,200 tax-free threshold and the low income tax offset. So in this example, you could draw that income, tax-free for as long as the money remained within the pension. But if you have other taxable income, that will impact the tax payable on those pension payments. So I hope that's helped talk about the two different taxes that you may pay in the event of withdrawing a TPD claim from superannuation. You've got the lump sum, which is a flat rate of up to 22%, or you can take pension payments, which is at your marginal tax rate. Some cases, it can be best to do one or the other, depending on what you need with the money, and sometimes it may be a combination of both options. Anyway, if you've got any questions, please get in touch. We're happy to help. Bye.